All right, everyone, so we're going to continue here. Chapter 5, Part 5, our favorite multi-candle chart patterns. Now, of course, we've already talked about single candle patterns being dojis, hammer candles, topping tails, and things like that. We're also going to talk about the first candlestick to make a new high. The first candlestick to make a new high is a multi-candlestick pattern because it requires two candles in order for the pattern to form. And it's actually the basis for many of the strategies that I trade. So if the high of the previous candle is $7, the first candle to make the new high is when the next candle breaks 7. It's not if it closes above 7, it's the second it breaks 7. Now sometimes I will buy early to anticipate the break. So in this case, I might buy at $6.95, knowing that when it does break, it might rip very quickly to $7.08, $7.15. And if I wait for it to actually break 7, I might not get filled. And if it does a false breakout, then my entry is at the very top, so the loss will be bigger. So the way I usually get the conviction to take an early entry is by reading the tape. So that would be something that we'll be talking about here, and this is the tape essentially. So this is my trading platform from today, and this is where I see the volume coming in and out. So just as an example on this stock, let's look at the chart, GNUS. So the high of the current candle, well, we still have 20 seconds left. So the high of the last candle is right here, just above 625. So around 628. So the second this candle, the second I saw the price at 27 and 28, I would go ahead and jump in. I would jump in anticipating that it's going to break 27, the high of that last candle. And when it breaks that first candle, make a new high, it's going to pop up and it's going to make a move. Now, this doesn't happen to be a pattern really right now, but just for instance. So this candle currently has 8 seconds left on it, and the high is 25. So now I would say, all right, 25 will be the first candle to make a new high. My order is going to be over 25. So watching for the break of 25. We've got 20 by 22, 23, 23, watching. I can even have this hand on the buy button. So watching the break of 25. We've got 23. Looking for that first 1 minute candle right there. I'm in at 24. Look at that. Not bad, right? That was a small trade. That was a small winner. I was in there at 24 and I sold at 27. So as it turns out, that actually, that actually worked. But that wasn't really a strong pattern specifically. But it was a great example of the first candle to make a new high. All right? So I hope that makes sense. And let me just, I just want to make sure that you guys are able to see. I'm going to update my window here. Okay, so I'm going to close this one. So was that clear? Did you guys see what just happened there? Oh, I should have been on full screen. Sorry about that. I'll put it on slides only. So let's do it again. The high of the last candle right here looks like it's about, let's see, 33. So the first 1 minute candle is going to be over 33. So new order could go at 33. I could put the order a little bit higher, watching. First 1 minute candle to make a new high. Watching, 32, watching. Hasn't broken yet. There, I'm in. We break 33. So that's I'm in the second it breaks. Now, I'm in at 34. I got a little bit of slippage on that entry, which sometimes happens. So I would use a 10-cent stop on that. This particular one, not maybe as clean as this. This isn't really a good setup, but my hope is that I'm showing you the entry point being the first candle to make a new high. All right, so we'll see. I'll just sell that, whatever. It's a 10 share loss. Okay, so, and I will show you more examples as we go through the classes. But today's lesson, we're going to talk about one of the patterns that I really like. And we expand upon this pattern as part of the Warrior Pro curriculum. So don't be concerned if you feel like, well, wait a second, this is kind of a very quick review of it. We will get into more depth. So in the Warrior Pro classes, it's going to be right in Gap and Go, momentum trading, Chapter 9, Chapter 10, and Chapter 11. This is where we'll get into more detail on this, and we'll also talk more about the intraday chart patterns. But for right now, this is a setup that we see a lot. The stock squeezes up, all right? When it's moving up, we see long body candles indicating strength. Sometimes they will come up to a level like a $0.50 or a whole dollar before pulling back. I like to buy the first candle to make a new high. So that means I'm buying basically on this pullback, and my entry is the second this green candle broke the high of the previous candle. The color of the candle doesn't really matter. I'm just looking for the first candle to make a new high. This candle could have been green, but it didn't make a new high versus the previous one, so it still isn't an entry. So don't worry about the color. So first candle to make a new high. And you can see right there, that ended up giving us this move back up towards the high. So that's this pattern is called a bull flag breakout pattern. It's a universally recognized pattern, and you could pull up stock charts of really almost any stock and you could see it. And this was the one today that I traded. You can see from my profit today, over $21,000 in profit. And this right here was the first candle to make a new high at 574. This is a 5-minute chart, okay? The pattern is valid both on 5-minute charts and on 1-minute charts. We can go in here, and I'm almost positive we'll see a setup on the 1 minute. Yep, here's one on the 1 minute right here, right there, and right there. So you can trade this both on 1-minute time frames, 5-minute time frames. You could even trade it on daily time frames right down here if you want to start doing this as a kind of swing trading strategy because you're working during the day and you're not able to trade. Now, that's obviously going to be a little bit more difficult for a number of reasons, but you could do it. This is a universally recognized pattern. All right, so a bull flag and a bear flag is the inverse. A bull flag has the following characteristics. A strong move up, 3+ green candles in a row, usually, followed by a momentary pullback, typically 2 or more red candles. Now, these candles cannot break the high of the previous candle. Otherwise, they're creating resolution, right? So we see that basically we see the stock squeeze up, a couple candles in a row, and then we want to see it pull back, pull back, pull back. And that's the creation of that flag. Think of it as a flagpole, all right? So that's the flagpole right there, and that's the flag up at the top. Usually they have this descending line here, but sometimes you'll see stocks that squeeze up and then they just consolidate right like this before breaking higher. So, there's many different shapes, but generally what we look for first is that big flagpole, which is the big move up. And then regardless of whether it consolidates like that or it consolidates like this, we just look for some type of consolidation in this area near the top. Generally, I say that if it has pulled back more than half of the move, that's actually just showing weakness, and that's not good. So I like to see usually that at the most they don't pull back more than half of the previous move. And I'll show you this one in a second, but let's go through a few more things here. So a perfect 5-minute bull flag will usually pull back to the 9 exponential moving average on the 5-minute chart. Take note of that. If you're not familiar with moving averages, we're going to fill in that a little bit further in these classes, in this chapter 5. It's a technical indicator. So a perfect pullback is down to the 9 moving average. The 9 moving average is this gray line right here. So see how it came right down to it? That's an almost perfect pullback. And that's on the 5-minute. If you're trading on the 1 minute, then you can still use the 9 moving average as your pullback. Basically the 9 moving average just represents that you have kind of this nice pullback, but it's not too sharp. It's not a big flush. It's just a sort of gentle pullback. Now, that's important because a gentle pullback on lighter volume, see how the pullback is on lighter volume here? It tells us that people are just kind of giving this a second, but they're not panicking. They're not selling. If you see a high volume pullback like we saw here, that's weak. I mean, that's showing that there's people actually just seriously bailing out. So we like to see light volume pullback, high volume breakout. So that's part of the volume pattern that I'll also show you. The entry point is for the first candle to make the new high, usually after 2 red candles and a tap of the 9 EMA, either on the 5-minute or the 1-minute chart. The stop will be the low of the pullback, whether it's the 5-minute chart or the 1 minute, it's whichever one you're using. So 5-minute pullback stop right here is 35. The 5-minute pullback right here, the stop was 57 with the entry at 95. So you're risking 19 cents per share. All right, so from a risk standpoint, you're able to understand what your max loss is. Now, sometimes you may see me in some of my more advanced strategies buy dips off of the moving average. So as I see it pulling back, I may take a starter. and then I may add as it breaks over this level, and then I've got a bigger position, and instead of being in at 95, I'm in maybe more like at 85. And then that can give me a bigger winner, or if it does a false breakout and comes right back down, I can get out break even. We will talk about that dip strategy in detail in the Warrior Pro classes. So here's a nice example and a helpful hint. Remember, the first candle makes a new high is the entry. It's the moment it breaks. I don't wait for the candle to close. So here we have a stock that squeezed up. As it was squeezing up here from 280 to 3 to 320 to 330, 340, 350, 360, 370, all the way to 4, it tapped psychological resistance at the whole dollar. It then pulled off that level, but it appears that it held psychological support at 350. So 350 could have been a possible dip entry, maybe 358 with a stop just below it, maybe 348. And then the first 5-minute candle to make a new high was right here. It was this candle right there as it broke the high of this previous green candle. Again, just because this candle was green doesn't mean it's an entry as a bull flag setup. There may be a dip setup, but as a bull flag, the entry is the first candle to make a new high. An almost perfect tap of the 9 moving average right here. Note the volume profile of high volume moving up and light volume as it comes back down in the pullback, and then high volume coming back in. These bars right here are colored based on the color of the candle. Although you can change them. That's a setting that I have. You could change that if you wanted to. Sorry, I was right-clicking on that to change it, but this is a picture. I can't change it. I can't change it on the picture, but I can go in here. So I'm going to right-click on this. I'm going to go to Properties, and actually I'm going to double-click this. Double-click Properties, and again, you can color this based on the price bar, which is what I do. So this is a red volume bar because it's a red candle. It doesn't mean that that entire volume bar was all sell orders by any means, but the candle was red, and so therefore we color the volume of that period as being from a red period. So there we have red, we have light volume green candle, and then high volume as it comes back in. Some people will do different types of overlays, which you could certainly do if you really wanted to, but I don't. I'm not sure that actually it looks really good on eSignal to do that. Yeah, that doesn't work super well, right? I can say that with I installed TC2000 just to show you, like for instance, let's just make this chart a little bit bigger. So TC2000, you can see here. Oops. This, I believe we can move overlay here, and then the nice thing is you can actually change the opacity of the study. So I'm going to go here to edit, and I'm going to reduce the plot opacity here and see how you can do that. That's kind of nice, right? So you can make it a little bit lighter, and then you could actually save a little bit of space doing it like that. Now, that's not picture perfect, and this is something that's nice about TC2000 is the ability to change the opacity, which you do not have in eSignal, but again, it's to each their own. And I don't believe that you can go any lower than a 1-minute chart on GNUS on this platform, whereas you can go down to 10-second charts on eSignal if you want to. But in any case, I just wanted to take that moment to talk about volume because part of the bull flag is a correlated volume profile. So here, I can tell you 2 reasons that I would have been a little bit cautious about this setup. The first one is that the high-a-day volume, the high-a-day candle was red, and therefore it appears that high-a-day volume was on a red candle. We have the pullback here, and we have 1, 2, 3, 4 dojis in a row. A doji at the top is a candle of indecision, but the 3 dojis in a row, it's starting to feel like it's a little bit choppy. Why is it chopping around so much? Back over 279 is the first candle roughly to make a new high. So that's the entry. Big volume, 400,000 shares coming in. And because this volume bar far surpassed this one, I'm okay with it. Usually what we want to see is as a stock is moving up that the volume is also increasing. It's not always the case that we'll see that. On GNUS from today, the volume kind of the same throughout the day, even as the price was going higher. So having that increasing volume is a good thing to look for. So we had it there, and we definitely had it here, increasing volume. So, and that's okay, even if it's increasing on the pullback, but as long as it's relative in that way. So there's another bull flag. Here's another one. So this is a bull flag, the first and second pullback. Generally, when I trade this pattern, I'm willing to buy the first and the second pullback. The first one usually is the strongest, although the second one certainly can be very strong as well. And when we get to the third pullback, that's where sometimes, especially in this case, as it's very extended off the 9 moving average, it can get just a little too stretched out, and people are like, I feel like I'm chasing it to get in up here, and that's where we sometimes see a little bit of a pullback. You can see that this one wasn't picture perfect. It pulled back for 1, 2, 3, 4, 5 candles before making a new high here, which popped up, pulled back down, but it didn't break the low either of this pullback there or this one here, which probably would have been a good stop. So you could have continued to hold, and then this candle is where you got the break through the highs. High volume came in, but then pretty high volume on this following red candle. Also high volume on this pullback candle, both red. Pullback, but then the first candle to make a new high works again. What I don't like about this stock is high red volume on several candles. That's a little bit concerning. So which time frame should I use? Very common question. We will see patterns form on 1 minute and 5 minute charts. If we see a bull flag on a 5 minute chart and we see it at the same time on a 1 minute chart, we would call that multi-time frame alignment. So let me show you what that looks like. So on GNUS here, if I make this full size, right in here, we were forming, as you can see, a 5 minute bull flag. Right there was at 74 being the high. On the 1 minute chart, at the time, this had hit a high, let's see, it actually looks like 74 was the high there. So this was the candle on the 1 minute that broke. So it's not really, this is not really a clear pattern on the 1 minute. So I wouldn't say that this is really clear multi-time frame alignment. This is definitely the first bull flag pullback on the 1 minute after the fresh one on the 5 minute. So the 5 minute starts to break out, and then the 1 minute forms a pullback in the form of a bull flag, a quick one. So that's a little bit of multi-time frame alignment. Up here, we've got a 1 minute pullback. That's inside this candle. Here, we're getting a bigger pullback. So this one doesn't have a lot of really strong multi-time frame alignment, but we will see that at various times. So the question for you, and something I think that's important to remember, is that it's really not a good idea for you to do something like, I'm only going to look at the 5 minute chart and I'm not going to look at the 1 minute at all. Because in my opinion, although you may see some really nice 5 minute setups, by not looking at the 1 minute chart, you won't know whether or not your entry is extended on a 1 minute time frame. So I think the strongest 5 minute breakouts are going to occur when you have an obvious setup that lines up pretty well both on the 1 minute and the 5 minute. So this ended up breaking out here, but then pulling back almost back down to the entry before the 1 minute gave you a clearer and stronger setup. Mark, yes, we will talk about the ABCD pattern. I have to refresh on my slides to the extent that we cover that in the starter class, but we do cover that in a lot of depth in the pro classes. So as we go, I'll see. I cover it just briefly in the starter. All right, so again, I set up my charts so I'm always looking at the 1 minute and the 5 minute side by side. And you can do that in really any platform. I mean, you can do that in TC2000, you can do that in E-Trade, you can set up charts side by side and you can link them. I'll show you how to do that when we get into setting up charts. But for right now, the question of should I focus on the 1 minute or the 5 minute, I wouldn't really do one or the other. I would try to look at both, because the 1 minute really is just a detailed look at what's happening on the 5 minute. So, I think it's important to look at both. All right, so in the Warrior Pro classes, we will be covering bull flags in a lot more detail, along with live trading examples, which show you the step-by-step process for trading this pattern, including how to find the bull flag, knowing the entry, the max loss, and taking the trade. That's where the pattern starts to turn into a strategy. It's when you add the parameters of how you trade it that it turns into a strategy. And we'll also be covering the following patterns in the same level of detail. the flat top breakout. So this is a stock that squeezes up. Consolidation is basically right at the top. So it's kind of a little flag at the top. And the obvious entry is right here, a break over the top, which is the resistance point. This is a moving average pullback, which can be taken as a dip trade. So buying a dip off of the moving average, buying a dip off of the moving average right here with a stop just below. You can also do this as a dip off the volume weighted average price. The 1, 2, 3, 4 ABCD pattern, those are the two names for it. ABCD is maybe a little bit more common, ABCD. So the ABCD pattern is when you have a stock that moves up, drops down, forms a bull flag, and now sometimes it pulls back so much, maybe it retraces more than 50% of the move, and so you don't feel really comfortable buying the first candle to make a new high. Or maybe by the time it sets up here, it's just a little too extended, so you don't take the trade. Or maybe you do take it, but it doesn't go back up through the high. It fails to break the high, and then it pulls back. As long as it holds above the low of 0.1, it is still consolidating sideways. So we generally would buy as it breaks out right here over the high of 0.2 with a stop either at 0.1 or 0.3, depending on how many shares you're taking. This is a setup that I like a lot. It does, on the one hand, it shows initial weakness because it's showing the stock was not able to hold the, the stock obviously, if it was really strong, would have been able to just break that first pullback. It wasn't. So that's a little bit of an initial weakness, but the longer it consolidates, the more generally traders will notice it and realize that there's a very low risk opportunity to buy this for the move up. And the entry starts to become more and more obvious. So we will discuss that one in a lot of detail. We will also talk about the bottom bounce, which is another multi-candlestick pattern. Again, just to emphasize, these are multi-candlestick patterns. They're chart patterns, stock patterns that require multiple candlesticks. Pablo, the entry on the ABCD pattern generally is going to be number 4 right here, point 4, point D, which is the moment the price breaks over the high of this last pivot. Because right now, we're kind of now like in this consolidation. So the second it can break that level, that's a long. Now, you could also take dip trades on it off the VWAP or the moving average, depending on where it's consolidating, and that could be valid as well. The bottom bounce reversal, after a series of red candles, the first candle to go green is a long, so we can get a bounce trade off of that one. And when we get into the pro class, I'll just pull this up here for you quickly. We will have so many different setups that we're talking about. Again, this has over 1,000 slides in it, but we'll get into the setups right here. So, breaking down the setup, breaking down how I found the stock, the pattern, each individual setup. So right in here, this is the ABCD setup. This is the flag setup that we just talked about. This right here is a micro pullback setup. So I've probably got at least 14 or 15 unique momentum setups, and then another 6 or 8 that are specific to reversals that you guys will be learning. All right, but at this point, I just wanted you to understand really that multi-candlestick patterns exist, and it begins with understanding individual candlesticks, long body candles, doji candles, topping tails, bottoming tails, and dojis, candles of indecision, if I didn't already mention that. All right, so now we're going to continue on with Chapter 5, Part 6. We're going to talk about those technical indicators. So those of you guys who are wondering about the EMAs, the moving averages, we're going to talk about those right now. All right, you guys, so we're going to continue on here. Chapter 5, Part 6, Popular Technical Indicators. All right, so in today's lesson, I'm going to talk about the fact that there are thousands of different types of technical indicators out there. I want to give you a solid foundation in technical analysis by showing you 5 of the most popular indicators that nearly every trader understands, even if traders don't actively use them. Now, I personally try to keep it very simple. So in my trading, I'm not currently using RSI or MACD, but I do use moving averages, VWAP, and volume bar. But I think it's important for you to know what RSI and MACD are, so I will explain it. Technical indicators essentially are complex formulas that provide a context for the current price action. So one of the problems with them is many technical indicators, they actually lag behind the price action. So in other words, they're slow to react. In order for the formula to calculate, they take what's currently happening and then compare that against what's been happening to give you the output of the data point. But that means it's sort of a derivative of just looking directly at the data as it's coming through right here in your trading software, as you're seeing the quotes and everything else. So because most indicators lag a little bit, some of them can be kind of tricky to use as a day trader. Now, in my early years of learning how to trade, I was so risk adverse. I didn't feel like I could afford to lose any money. I was looking for a foolproof strategy. I was looking for an indicator that would tell me when to buy and when to sell that was right 100% of the time. And so in that search to find that perfect technical indicator, I created some pretty complicated looking charts. And in fact, I can say that it was really not worth. At the end of the day, I discovered there is no holy grail. So I would do things like I would say, all right, well, I'm gonna insert a study here, and I'm gonna add. Let's see, where's my, there it is. Okay, so I'm gonna add RSI. So relative, which is called, RSI is short for relative strength index. And then, maybe I'll also add the relative momentum index. And then I'm also gonna add Bollinger Bands. And I'm also gonna add MACD. And maybe I'm also gonna add stochastics. All right, so, next thing you know, you've got these charts that are getting really crazy looking, and you could start, on the one hand, you could look at this and say, wow, okay, so this broke out here. So therefore, anytime I see, what is this, MACD above 0.5, I'm gonna buy a stock. And anytime I see the RSI above, what's this, 68, I'm gonna buy it. But what you'll find is that, you could look at a ton of examples of stocks that have similar data points, but very different price action. And so what you're essentially doing is you can create contradicting sets of circumstances where one indicator says one thing and another says another. And at the end of the day, it's not, in my opinion, going to make you a profitable trader. It's going to make you a very confused trader. So I'm going to encourage you guys to keep it really simple. But let's start with one of the simplest indicators of all, moving averages. A moving average is the average price of a stock over a set period of time. So each one of these lines right here is a moving average. Okay, so we see 1, 2, 3, 4 moving averages on this chart. Moving average prices will vary between time frames. Why is that? Well, let me show you a real-time example right here on the stock. So I'm going to remove this line here. So the volume weighted average price, and we could just go to current, is currently the 9 exponential moving average, which I'll explain what that means in a second, is currently at $5.58 on the 5-minute chart. On the 1-minute chart, the 9 moving average is at $6.73. So why is it $6.58 and $6.93? Why is it so different, or $6.73? It's different because the average price over the last 9 1-minute candles is different than the average price over the last 9 5-minute candles. A moving average tells you the average price over the last X number of candles. It's your job to choose which moving average period you'd like. So as I increase the length of this moving average, we're going to be including the average price of more candles. So the average price, watch it change. It's at 62 right now. I'm going to move it up to 10, and it goes down to 60. Now let's move it up to 15. It goes down to 54. And that's because the average price of the last 14, 15 candles is a little lower than the last 9. The average price of the last 20 candles is down here at 43. The average price of the last 30 candles is down here at 24. And you can keep going into longer and longer periods. So what do most day traders use when it comes to moving averages? And what type of moving averages do we like to see? Well, there are two types, really two types of moving averages. There's some complex ones, but there's really two. One is a simple moving average, and the other is an exponential moving average. A simple moving average is simply the average price over a set period of time. That's it. So it's we call it the simple moving average because in contrast to the exponential moving average, which actually weights more recent price action as being more important and more significant. So this is a more complicated formula. The simple moving average is just the average price over the last X number of periods, whereas exponential is the average price over the last X number of periods, but more recent price is more important. So let me show you again this example. So this is exponential, and I changed this to simple, and usually the price is a little lower. So especially when we go out to longer time frames. So this is the 30 as a simple moving average, as an exponential. In this case, it's actually a little lower. We go out a little further. We go out to the 50. The exponential is at 89. The simple in this case is at 67. So I have always used exponential moving averages for intraday price action. But you know, a lot of traders do use simple moving averages. And ultimately, the only reason these are respected is because other traders are looking at them. Could you, if you wanted to, add simple and exponential? You could. It's kind of getting a little busy to do that. I don't know that it's really the best idea. And to be honest, I'm not really sure collectively which is more popular, a simple moving average or an exponential, because you see traders pretty actively using both. And sometimes a stock like this appears to be respecting a 9 moving average, and then through here, almost doesn't care at all. And then it's kind of respecting it again. So maybe on this stock, simple moving averages are being respected more. Maybe it's actually the 10 that more people are watching. I don't know. Maybe it's the 20. I mean, it doesn't really look like it's the 20, but you never know. I mean, it did find support there. So moving averages are a little tricky because there's so many variations in both simple and exponential, the smooth, the weighted, etc. Those are less common. And then, of course, all of the different period times, the lengths. So I'll talk a little bit about the ones that I use. All right, so setting up a moving average, as you can see right here, and I'll just scroll this down. The 3 that I use primarily are the 9, the 20, and the 200. At various times, I've used the 50, but I've removed it from my charts at this point because it's an extra line that isn't really doing me a lot of good, and I don't really feel like I need to see it. So why do I use the 9 instead of the 10? When I started trading, whatever this was, almost 10 years ago, I noticed traders out there using the 9 and talking about the 9 EMA. So I was like, okay, I guess I'll put on the 9 EMA, and I've been using it ever since. So it's one of those things. Why use the 9 when you could use the 10? A lot of people probably do use the 10, but a lot of people use the 9. So I use the 9, and then I use the 20 and the 200, and they're all exponential moving averages. And actually, you can see here that I'm only using the 9 and the 200. This is a little bit of a quirk with e-signal. I can't tell you how many times this has happened. You can't lock moving averages. So sometimes, when I'm deleting a trend line or something like that, I'll accidentally delete a moving average, and then I won't notice it for a while. So we're going to change that to exponential. So we add a study, we make it exponential. All right, so that right there is our exponential moving average, and I can now, it's actually not the right color, so let me make this a little bit darker. All right, so there we go. So that's now the 20 exponential moving average. So I've got the 9, the 20, and the 200. Now I would say of those, the 200 is the most respected. Almost everyone uses the 200, especially on daily charts. But some use the 200 simple and some use the 200 exponential. Could you have both on there? You certainly could if you wanted to. I could put the 200 exponential or simple here. And let's close this for a second. 200. That's the simple. And maybe one will be like this. Oh, maybe what I'll do, make it kind of clear. I'll just make the simple dotted. All right, so you look at a stock like the S&P 500, and in fact, gosh, that seems okay. I was gonna say that seems impossible they would be the same. Yeah, so you can see they're a little bit different. Which one's respected? Well, in this case, I would say the exponential was respected. Look at that. I use the exponential. In this area, it doesn't really look like either are respected all that well. In fact, maybe it does look like the simple is respected a little bit more. So perhaps it's helpful to have both on there. You don't want to get things to be too busy, but some people use simple and some people use exponential. So it's hard to know which is really the right one to use when a lot of people use both. And again, when you think about if a lot of people use both, then all of the people that are using the simple moving average are going to look at this and say, oh, it's got resistance right here. So what are they going to do? Well, based on that input, they're going to say it's time to sell it. So, it's not a bad idea to kind of have, your eye on where other people might be putting out their sell orders. You just don't want to overcomplicate things. So we'll move this back here and let's get into some examples. And as we set up our charts, I'll also show you on TC2000 how to set them up, and I'll probably open up my TD Ameritrade account and show you how to set it up over there as well. All right, so here's an example of a stock hitting the 50 moving average, exponential moving average on the daily chart. Again, it's an indicator. It's a moving average that I've taken off because I don't think it's especially significant, but you can see it there. You can see it again a little bit here and here and here at the 50. Very clear. That is clear as day. So that's the type of stuff that you really want to be aware of. What if you were buying this at $4 and you didn't know that it had this level of resistance? Because remember, right now we're building up your knowledge. So you would say, well, based on based on horizontal resistance, you've got right here a trigger at about 415 that gives us room up to 5. And you would say there's no resistance until 5. Well, hold up. In this case, we've got the moving average coming and crossing through that level. So although you're right that there is a window from here to here that then gives you room up to here, it's got to get over the 200 first. And in this case, it couldn't do it. Here's an example of support at the 200. So this is bouncing off the support level, and it's clear as day. If you didn't have that line there, you'd be like, why is this bouncing here? This is weird. I mean, you might draw a trend line. This also, I would say, has an ascending support line. It's not a coincidence that that ascending support line is right near the 200 moving average. What happened is first it tapped here, which was just the pullback. And then at this point, you were able to draw a trend line from those two candles. And then you were able to stretch it out to this one. And that's where you got this support level, which coincided with that 200 moving average. So this is where we're seeing that these moving averages are important. The 9 on the daily in this case is not very significant. The 20 doesn't seem to be really respected. The 50 doesn't also either really seem like it's that respected. So I would say those ones aren't that significant. And so you could, and again, not to make it complicated, but if you wanted to say on the daily chart, you know, I'm just gonna, I make the moving averages, the 200, a little bit bolder. And maybe here you say, you know what, I'm just gonna make this like a little lighter because I don't wanna see it. I don't really, well, actually that made it even brighter. Maybe I have to make it closer to black. You know, like I don't really wanna look at it that closely. This one, I'm gonna bring this a little closer to black, so it's just like a little darker. They're just not that significant. I'm gonna make them thinner, just not notice them as much. And I think that would be totally okay. And or you could even say, you know what, I'm not even gonna look at it because it's not usually that significant. Here we've got resistance at the 200. Again, this one happens to be about the same price as the other one. So again, coming up at that resistance point right at the 200. So when I'm trading a stock, if it has a lot of room before it hits that resistance point, I'm fine with trading it. But if it's right underneath that resistance point, that's where I'm gonna start to feel like, all right, you know, we're getting a little close to resistance. This is not ideal. Another one right here, tapping that 200, that's resistance. This one, okay, so now we're switching gears. This is indicator number 2, the volume weighted average price. So the volume weighted average price is this orange dotted line right here. This is also a very popular indicator. And the nice thing about the volume weighted average price is that there's really only one setting for it. There's one setting. I mean, different platforms can give you different figures. So right now the VWAP on GNUS is at 619, all right? But let's check this. Let's change the time template to auto. All of a sudden, the VWAP has gone up to 628. How did that happen? I took away all of the pre-market data. Pre-market chart is turned off. The VWAP is going to be different. So I think, number one, having it calculate with pre-market data is important because that's going to be more accurate. So I do want pre-market data enabled and turned on. And that's this gray area back here. So this can be after hours into pre-market. So after hours went until, let's see, 8 p.m. And then pre-market started here at, looks like, I don't know, 4 a.m. for the stock. So started really early, but very, very light volume. It started to pick up a little bit closer to 8 a.m., 8:30 into 9. All right, so the volume weighted average price, when you put it on your chart, and if I double click on it, you will see that there's only one setting. Now I can change the start date, but I'm just gonna leave it like that. It's one setting. So everyone that uses VWAP, they're using the same setting. Okay, that's good. It could mean, again, pre-market, after hours, data could be a little different, but it's gonna be pretty close. Now, what is the volume weighted average price? The volume weighted average price, it's like a moving average, But in addition to including the average price, it also factors in the amount of volume that occurred at those prices. So what it actually gives you is the exact average price of the stock over this entire period of time, starting at the very beginning of the day. The exact average price of the stock of the most volume at the average price is $6.20. This is equilibrium. When the stock is really extended away from it, it obviously shows that it's strong, but extended. When it comes down to it, that can be an opportunity to buy the stock off of this support level, off the equilibrium point for the next move higher. When a stock is really weak, it's extended away from the VWAP, we look for a move back up to the VWAP on a reversal. If it comes back to the VWAP, we may see it hit that level before fading lower. So it's a very well-respected indicator. It's the same both on the 1 minute and the 5 minute chart because the average price and volume should be exactly the same. I mean, every now and then you'll see it slightly different, but it should be almost exactly the same. And again, as I've mentioned, look at this drop here. This thing likes to really pull the rug on traders. So again, between different platforms, it could be a little different. So this is, let's see, eSignal right here, TC2000. If I go and add the volume weighted average price, VWAP right here, it's at 675, but pre-market data is not, I don't think pre-market data looks like it's turned on. So I've got to change my my pre-market. Pre and post, so show always. And there, that's going to change the view. Oh, that was actually the moving average. Okay, anyways. So the VWAP here, edit, and the line style, I'm going to make it the hash, kind of like that, or maybe like that. Again, you can change the opacity on it, but that is at, you can't see it, I guess, without clicking, but it's at 622. So it's basically at the same price as eSignal, which would make sense. I mean, it should be, but sometimes they're a little off. So I would say if you were only going to use one intraday indicator for any particular reason, you're like, I can only use one. My mom said I can only use one indicator, so I can only use one. Whatever the reason is, I would use the volume weighted average price, VWAP. You can see this is an example where the stock was above it, holding support, flushed back down below it, came back up to it, hit resistance, failed, back down, came back, broke through it, now above it. So this is such a strong indicator. Below it is weak, above it is strong. Certainly when a stock is below it, you can still buy low for a move back up, but this is upside resistance. Certainly when a stock is above it, you can short it for a move back down to the VWAP, but this is below, this is support. So the volume weighted average price, again, there's only one indicator for it. And actually, this is a different one. I had to have a developer custom build it because eSignal didn't have the VWAP until like a year ago, which is crazy. But now they have it standard. So VWAP, so just to go back, I have it on my 1 minute and my 5 minute charts, but I don't have it on my daily. What's interesting is that it actually is not, I don't believe that it actually even works on the daily. I've always been told that it doesn't even work on the daily. Although you would think that it could, but it's, the VWAP is the volume weighted average price, and it's supposed to be for the day. And so it doesn't come up on the daily, and it doesn't work on the daily. I don't know why. I mean, I guess, you could, it would be a different average to use, but in any case, it doesn't work on the daily. It never has. It's only an intraday indicator. So you can use it on 1 minute, 5 minute. If you use 15 minute or 60 minute charts, you can use it, but it's the same on all time frames. So the only value in having it on multiple time frames is just for when you happen to be focusing on the 1 minute chart, you can quickly see if it's bouncing off that level, but it is the same on all time frames. Oh, we've got a little Robin out here. Interesting. Nope, she's just keeping an eye on things. She seems pretty, I'll switch to the outdoor cam here. So not too exciting. I mean, it's a little bit of a nature show here. Oh, there she goes. So she's at the top of that rock. She's got a nest right up on my, above one of the outside lamps. All right, so let's see. Okay, so there we got the volume weighted average price. That's how you put it in. The third indicator that I think it's good for you guys to know about is the relative strength index, RSI. Relative strength index is a oscillating indicator with a high of 100 and a low of 0. And it tells you if a stock is 100, it is incredibly strong. It couldn't possibly get any stronger. Therefore, might be time to think about shorting it. If a stock is at 0, it's incredibly weak. It couldn't possibly get any weaker. Therefore, might be time to think about buying it. But stocks can remain in overbought territory up here above 80. Or oversold territory below 20 for very long periods of time and continue to go lower. Selena, who's a graduate of the Warrior Pro classes, and you probably have seen her in the chat room, she uses RSI quite a bit as part of her strategy. So, she's got a way of trading it. She likes it. And as long as you consistently use the indicator, then it can become a tool that can help you. I don't use it in my trading. I did at various points, but then I felt that it was not really helpful, so I stopped using it. But again, you have to use it consistently in order for it to really help you consistently. So RSI is generally a standard indicator that you add, and it's pretty much the same every time. So you pop that in there. You can add bands if you want, which a lot of people will do. And the band is this green band and the red band, and that basically is drawing your overbought and oversold lines. Above green is obviously very strong, but can also be an indicator that it may be getting overbought, due for a reversal. But you would only, so again, an indicator like this can help you confirm what you already see in the chart. So what do we see in this chart? What kind of candle is that? It's our shooting star inverted hammer topping tail candle. So we've got this high topping tail plus the RSI is in the overbought territory. That helps confirm what we may already be suspecting. Use it to help with confirmation, not as a sole buy-sell indicator. The fourth is MACD, which is called the moving average convergence divergence indicator. It's an oscillating indicator, which means it goes up and down and up and down. And what it does is it measures whether moving averages are moving apart or coming back together. So as moving averages are moving apart, it would mean that the shorter period is moving up really fast. That's because the shorter period responds faster to price action. So as they're having a divergence, you see right here, it's a divergence. It's an indicator that the stock is really strong. Well, obviously, look at the chart. But when the stock starts to get a little slower, the moving averages also start to converge. They're now coming back together. So, this would say, okay, right here was what we would call a moving average crossover, or a MACD crossover. So the MACD crossed right here. And sometimes traders would say that crossover is the place to go short. In this case, that happened to be true. This also was the break of the VWAP, back here, which was a little bit more, I think, significant than the crossover. If I put up my chart here for GNUS and I go and I'll just double click here. I'm going to add a study for MACD. So MACD. These are the standard settings, the fast length and then the slow length. You can customize these. Some people do, and then therefore they think they've got that holy grail edge. Guys, you wouldn't believe it. I'm using, the 19, or I'm using the 9 fast length by the 42 slow length using a signal smoothing of 11. This is money in the bank. All right, well, it's money in the bank until it's not. This told you to sell and go short right here. You're still short until right here at a loss. This is lagging so far behind price action. I just don't think it's helpful. Look at all these crossovers. So you go short here, and then you go back long here, then you go back short here, you go back long here. I mean, some of them might work, but you'll have stocks that end up jumping above and below the volume weighted or jumping above and below the MACD multiple times. And a stock like this, I mean, okay, it never got above the MACD, but by the time it crossed above the MACD, it probably would have been up here. That's like 20% off the low. So, if you use it consistently and you find that it helps you, I don't want to discourage you from doing something that helps you be successful. But I think for the type of trading that I do, which is really short-term trading, I don't think that it is actually helpful. I think that it's actually going to slow you down. So it's not something that I would really encourage you to use. All right, so that's the MACD. Again, an indicator that you won't see me using, but I figured you should at least, as your teacher, I got to make sure you know about these things, and go ahead and put them on your charts. If you find it helps you, that's terrific, but I don't want you to think that an indicator like that can be used as a blind buy-sell signal in order to prevent you from having to make the decisions yourself. You have to make the decisions yourself. And then the most critical, ultimately, to me, are volume bars. There are different ways of displaying volume, but this is how I like to display the volume bars. So again, this is really very simple, just in the sense that it's as you can see right here, it's just the standard bar, and it automatically scales, and it creates it tells you how many shares, what it is for the top. So this line is 500,000 shares. This one's 250,000. It's a histogram. You could change it to a line chart. That's not going to work for me. I don't like that because I want to do that volume profile. I've seen some people change the colors. Again, if you have a color blindness issue, I think that's fine to do as you wish, but I don't do that. I don't make them super tiny, which is sort of the default. When you first install, it looks like this. I like to make them bigger because I like to really see what I'm looking at. Not really such a thing as too big. I mean, I want to be able to really see it pretty clearly. I think it's fine like that. So there are some indicators that actually put volume this way, right here. And that's very different from the way I view volume. So I've tried using them, and I have not found them to be super helpful. Let's see, volume, I think it's on balance volume. No, it's volume at price. Yeah, that's it. So volume at price. So what this is basically telling you, that's a terrible color. It's not a lot better, but we'll just leave it like that. So what this is essentially showing you is the volume that occurred and the price that it occurred at. So hang on. Let me delete this. So why this could be somewhat helpful is it shows you sort of the peaks and valleys of where we're seeing the most volume in the stock. All right, so we're seeing a lot of volume on the stock in this area and in this area. What we would sometimes say is that these are areas of consolidation. So this, obviously the peak volume has been in this area right here. Well, again, it's fairly obvious that is the case, but I guess the interpretation would be that if the stock is able to break out of this range, then it's helping you visualize that this is the period of consolidation. So if it can break out of consolidation, then usually that's when we see bigger moves. It's a consolidation period where we see heavy volume, people buying, people selling. It's kind of this, just churning phase. And when you break out of that churning phase, that's when it usually rips up and makes a big move. Or flushes and has a big move going down. Huge today, not really super easy because of just such a strange chart. AESE from the other day, we could look at that one. So this changes, of course, as you go back. This isn't a super disruptive indicator, and I honestly would say that if there was one other one I would consider maybe using sometimes, it might be this, because volume is so important to me, right? So this clearly shows us if it breaks below that level, it's breaking out of this consolidation to the downside. We can confirm that both looking at the chart, it's obvious, but also the volume is extra confirmation. However, it broke, flushed down, and then came right back up into this area. So why did it do that? There was no indication it would do that based on the volume profile. So I don't think it, and I don't know if there's a lot of indication that it was going to do what it did right there. So you might find it interesting, and I don't recall in TC2000 if I can add volume at price. So this is a little bit different the way they do it. As you can see, it's actually showing you the red and the green. I mean, it's showing you there was a lot of buying volume, I guess, up in this area. So if it gets back in that area, would we have more buying volume? Huge, HUGE, not as obvious that there's anything there. 5 minute, 1 minute. I don't really see. I don't know why they're doing it in a very different way, because it's so separated. It's like only showing you 3 bars. Why only 3? I guess you have to zoom in to see more. So that's not as helpful, even though it's called the same thing. It appears very different, right? So anyways, volume, very critical, and it's something that we will be looking at primarily as volume bars right down here. And even though you can't see the chart, can you imagine what this stock might have looked like? This to me looks like a stock that basically squeezed straight up, started to pull back a little bit, and now we've got 3 green candles, but they're light volume, so maybe slight green candles before dropping down. That's kind of what I look at. And I don't know whether or not, if I pull this slide up, if that's a, let's see. Yeah, I don't have the actual price action to see, so I'm not totally sure what it looks like, but you can draw some conclusions about the price based on just the volume bars. So here again, we've got green volume coming up, high volume on this red candle. This is a big red candle. It's not quite a bearish engulfing candle, but it's close. So sign of weakness, but then all of a sudden it rips back up, high volume, pull back, high volume as it's breaking out. So I look very closely at volume bars and as I'm looking at chart patterns, but when I'm actually trading, I'm really looking at the time and sales here. I'm not staring at the volume as it's ticking up and down. I only look at this as glancing over and seeing what was this past pattern looking like. So I would often say that looking at charts is kind of like looking in the rearview mirror. And that's not the best analogy because they can help you interpret what's coming next, but it is historical. It's looking at what just happened. And so while I'm trading, I look at what's just happened to help me interpret what I think is going to happen. Because essentially, unlike driving a car, we basically are blind in that we can't see the road, 50 minutes ahead, 60 minutes ahead. We don't know what's going to happen ahead with stocks. We are just making an interpretation of what we think might happen and essentially an educated guess. So I would say that this is as close as it gets to looking straight out the windshield. This is looking at what's happening at this very moment. And this is looking at what has just happened. And based on what's just happened and, a pattern recognition of having seen this type of thing in the rearview mirror before and knowing that sometimes that leads to this type of big breakout, I'm going to be looking for that. So I look at the charts as sort of context. What is the current price action? What has previously happened? And am I seeing a pattern that is familiar and that can help me interpret what might be happening next? All right, so now we're going to go on to Chapter 5, Part 7, Understanding from a Technical Perspective what makes a daily chart strong or weak. So this is coming back to what we touched on, remember, in Chapter 2. In Chapter 4, in Chapter 2, we were talking about what makes a stock strong. And we said 2 important components is a review of the fundamental analysis, fundamental news, which we talked about in Chapter 4. And the second was a technical analysis. And so that's what we're going to talk about right now as we get into Chapter 5, Part 7. All right, everyone, so we're going to keep going here. Chapter 5, Part 7, Understanding what makes a strong or weak daily chart. Again, a extension on what we began to talk about in Chapter 2 in terms of finding strong stocks to trade, in terms of finding strong financial instruments to day trade. What we're looking for is an imbalance between supply and demand. We know that supply comes from the float. That's part of our fundamental analysis of checking the float. Although you could say a float is a technical component and is also part of technical analysis, you find it by looking at the fundamentals generally. I suppose it could fall into either category. In any case, what we're going to get into now are more of the technical components of identifying a strong daily chart. So I'm going to show you some instances of strong daily charts, some examples of weak daily charts. I'm going to help you understand how I break them down each morning. Because my process every morning is basically the same. I sit down, I see the top 5 or 10 stocks that are up the most pre-market, and what I need to do is perform my fundamental analysis of understanding whether or not there's a news catalyst driving the move. That's what we talked about in chapter 4. And then I need to do my technical analysis of understanding where we have levels of support and resistance and where we have potential opportunities where the stock has no resistance. Therefore, it could make a fairly big move. A strong daily chart, all strong daily charts will have a few common characteristics from a technical perspective. Just like all stocks that make 200 or 300% moves have several common characteristics. 200, 300% move stocks, they almost always have floats of less than 50 million shares, typically less than 20, very frequently less than 10. They typically have a daily chart that has been beaten up for a while before starting to suddenly reverse. They usually start at a low price of $1.50 to $2 and then squeeze up to 8, 10, and 15. They usually have initially some type of catalyst, but then additional catalysts that come out in day 2, 3 of the move. For stocks that it all happens in one day, typically we just see outrageously high volume, a really strong catalyst, and some initial moves that surprise short sellers and then get momentum traders very aggressive. From a daily chart standpoint, most strong daily charts have large gaps or windows that offer room for the stock to make big moves. Number 2, it's not approaching any type of resistance level. It's not really close to a window gap, ascending, descending resistance level. Or if it is, we see that as soon as it breaks that, it has a lot more room to move. Ideally, the price will be above the 200. But if it's below the 200 and like way, way, way below the 200, then I would say it's okay because it has lots of room to squeeze up to the 200. Remembering, of course, that the 200 EMA is a significant support resistance level, as is perhaps the 200 SMA to a, I think, lesser extent, but, maybe with some of these stocks worth watching. Just not because I maybe like it, but, even if I don't like the 200, if lots of people are using it, it's going to serve me to make sure I see what other people are seeing. Typically, we want to see the stock above the 9 EMA for a long bias, and that's going to be on the daily chart. And we like to see that the stock has a history of making big moves. Therefore, we would say it's a former runner, a former momentum stock. So those are the 5 characteristics of a strong daily chart. And although I didn't mention this when we were talking about multi-candlestick patterns, it's probably good that I mention it now. There are no 2 charts that are identical. There are, no 2 days in the market that are identical. There's lots of similarities, but ultimately every stock that we look at and every chart that we look at is unique to that specific stock. And so when we are looking at the criteria for a bull flag setup, an ABCD pattern, a red to green move, or a strong daily chart, we have what we would consider to be our our common characteristics that we look for, some of the very specific things that we want to see. But we may find on a particular day that a stock is really close to the 200 or does have resistance, but is still really strong, perhaps due to something else that's happening in the market that's creating a lot of momentum. And other times we'll see a perfect daily chart and then the stock fails to break out. So it's important to be mindful both that sometimes you have to accept less than perfect setups and still be willing to take the trade, and sometimes even perfect setups will fail. So here's a strong daily chart example. All right, so this is a stock from a while ago, but this is a day where it made a really big move. So on this day right here, before all of this had happened, what would you look at? You would look left and up. So as we look to the left, we would see the high right here at about $2 of that green candle right here. All right, so we've got the high there of 2. So if it breaks 2, it had room to the low of this candle right here, which was about 270 or so. And if it broke that, well, it has the 200, but then it has room up to the high of this candle. And if it breaks that, it actually, if we went back, it clearly had more room, and it made this really big move. So on this day, we ended up having the stock squeeze from $2 to $10, 400% in one day. The next day, it continues higher, hitting a high of 14. Incredible. Then it pulls back. Now, as we're looking at it on this day here, as it's starting to squeeze up, I would say, all right, well, the stock clearly is a former runner. It's a momentum stock. As I look over, I might say, okay, we've got a resistance line here, about here, little stuff here and here. Over this level here starts to look interesting. This looks interesting. And then we're starting to look good for a move back up towards 11. So, I kind of see it actually that it almost came right to this resistance right here, which would have been good to know about. But generally, it's a stock that's a former runner. It's above the 200 moving average, and it's starting to pop up here. So traders will probably be pretty excited to trade it even though it doesn't have maybe super, super obvious levels on the daily chart. This is another stock right here, a different one. Again, former runner, history of making a big move. Not a whole lot different from some of the other stocks we've seen recently, like GNUS. Pull back, a pop up, big drop, all the way back down. Now it's bouncing off the 200 moving average. And remember, this was one that we had actually, I think, looked at a couple of times earlier in this class. So bounce off the moving average there. That's a nice technical level as support. It is below its 20 moving average. You know, you can tell it's like, all right, well, it's really been beaten up here. And what we might say is that this stock has some bag holders. So what is a bag holder? A bag holder is an expression for a trader who bought on this day here, and maybe they were trying to take a swing trade and hoping it would go up to 50 bucks. And the next day it dropped down to 9, and they basically said, well, I'm either holding this until it goes to 0 or goes back to my entry because I'm not selling it for a loss. I refuse to sell it for a loss. I'm just going to hold it. Next thing you know, it's down at 5. Now, maybe down here they decide, okay, I'm going to add another, X number of shares down here to bring my cost basis from here. Well, if I double my size, my new cost basis is going to be right here. Maybe they'll say, you know what, I'll put an order to sell my whole position at break even at 13, right? Get out flat. Now they've got double position. So as this comes back up, we might run into some upside resistance from bag holders who are happy to get out of the stock break even after having been down 70% on the trade or whatever the case is. So until the stock actually makes new highs after a move like this, we can see that days like this pop up but kind of run into resistance and fail. That's not uncommon. I would still say it's a decent daily chart because it's a former runner, and certainly in this area, it would have been a very strong chart because it had no nearby bag holders. So in this area, it was really like what we would say blue sky, which is basically no upside resistance, has lots of potential. But sometimes after that big move and a drop, we can get some bag holders. So this is one that's starting to look a little bit more interesting. Big green day back here, maybe some bag holders that got caught. It starts to pop up here on this day, gets slammed back down. Maybe people bailing out. It starts to pop up again on this day, again gets slammed back down. Pops up again on this day, gets slammed back down. Now on this day, as it's coming up, we're getting really close to back to the high of this move, which by this point, we would expect that anyone that was holding it underwater would be able to have already gotten out break even if they wanted to. So now it's starting to look like, okay, this is where up in this area, we might start to get a bigger move. I don't remember if we did or not, but GLBS, another one, huge move right here. This was when we were having that crazy squeeze in the shipping sector. Stock went from $2 to $22 and then came all the way back down. So definitely there were some bag holders. We did have some bounces off the 200 moving average here that gave us a couple of short-term trades, quick day trades, another quick day trade here. But you have to be a little careful until it starts to really open up. And this one it didn't end up being able to open up. But again, a fairly strong stock just in the fact that it was above the 200 and showed the history of being a former momentum stock. Meaning on a day like this, even though I might not have expected it would get all the way back up to the highs, this is still a day where it went up like 200%. So that's a great opportunity for a couple of base hits. Here's another one. Big move here, big drop. Now this is a period of 3 or 4 months. So at this point, it's kind of had enough opportunity for people that might have been bag holders to likely sell for a loss. It also carried over into the new year. Oftentimes, traders will sell for loss in December, stocks that they're holding, so they can realize the loss on it against their taxes going into the new year. If you're holding a loss, it's an unrealized loss. You can't write that off against your gains. So we're in the new year here, 2018. The stock, pops up on this day, and on this day, nice big candle from $3 to $4.25. That's not bad at all. Pulls back for a couple days, and then all of a sudden we've got another day where it's popping up. And so as we looked at it here, we were like, okay, this thing is starting to open up. It had a big candle here. It's beaten up. It's coming off the lows. It's got lots of room up to the 200. 200 will probably be resistance, and in this case it clearly was. But it's a former runner. I mean, we've got room on the daily chart from the high of this candle really to the low of this candle, which is gap fill. Now, it didn't fill the gap because the 200 moving average blocked the way. This is an EMA and clearly was very well respected. It does end up getting over that level up here, but then pulling back. It was a little choppy. But this stock gave us multiple days of opportunity. because it was volatile, because each day it was squeezing up 50 cents, $1, $2 a share, even though it wasn't necessarily as fun as it might have been on this day, it still gave some really nice trades. So long period of consolidation, a former runner status, and then breakout with positive catalysts. This is actually the same stock, and this is a zoom in. Okay, this is a zoom in of, wait. So I'm trying to see, I think what I was saying is that this area right here was a bad chart. So if we saw it like on this day, perhaps, that this was not, there weren't clear windows. You've got a window here at 429, but this is a little bit of a confusing example as I look at it, because it's the zoom in of this one, which makes sense. Here, when it started to break out, I mean, in terms of windows, you've got a window a little bit of a window right here, and then you've got gap fill right here. So it looks good up here, but down below that, just kind of smaller resistance points. Remember, in order for it to be a significant window, what we like to see is a big size there. That it's and these ones in this area were really just kind of tiny, like little blips, like here and here and here, a little gap fill here, but really small, like 25 cents. So it didn't really start to get exciting until right in this area where it starts to pop up. But I might change this out for the next for the PDF slide for the next time I teach the class, because it's a little bit of a confusing example. So next one here, this is a good example of a bad daily chart. The stock is obviously below the 200. Now the 200 is a ways away, but if this was gapping up right here to like 9, if I look to the left and up, I mean, yes, it's got some room up to the 200, but I don't see any clear resistance. Or windows. It's just kind of, it just doesn't seem like there's anything really super obvious there. Oops. Again, it's got a little bit of former runner status, but it broke the 200, then came back below it. Couldn't get and hold above that level. So this one just doesn't look super, super clean. And to show you a couple more examples just on the chart here. So let's look at a few examples of kind of not great daily charts. So this stock here had a good daily chart as it broke on this gap here. It gapped up pretty significantly. It was above the 200. As we look to the left and up, we definitely saw that above this level, up to here and here, looks really good. Down in this area, a little bit of resistance in here, kind of running into that level right up here. But not a bad daily chart being above the 200, and with these levels being quite a while ago. Let's see. Other ones that we had, GNUS, we can look at this one from back in this area. In this area, I would have looked at it, obviously at 42 cents, I wouldn't have been interested, but I would have said, okay, well, the 200 moving average is here. It's kind of close. What kind of windows do we have? Yeah, a couple. It's a nicer one there from 70 to 89. A little bit of a gap right here in this area. So, there's a couple in there, but not picture perfect. Let's see, LEDS. LEDS now above the 200 moving average. A history of topping tails, so a history of popping and dropping. AKER. History of, at this point, very well-defined history of popping up and dropping on these candles, as you can see here. Initially, I would have said, okay, it does have gap fill on this day up to the low of this candle. So gap fill target up to the 200, but then on the next day it popped and then rejected, so it didn't hold that level very well. What's another one? GLBS at this point. This is not a very attractive daily chart. History of popping and dropping, so weakness there. It's obviously cheap, but fairly close to the 200, so it doesn't look fantastic. Tops, another one. Cheaper. Let's see. I'm trying to think of a couple others. MDGS. This one's above the 200, but so many red candles. It doesn't really look like a former runner. It looks more like a stock that pops up and drops. So that doesn't look very nice. I really don't like the look of a stock that does that. Groupon. this is a pretty unattractive chart, although I do see gap fill on it from here to here, but that's right at the 200, so it's going to hit resistance there. Today, as we were looking at huge, HUGE, this one I was looking at and thinking, okay, it's above the 200, but it doesn't have any big windows in this area. It's just kind of like individual candles. It's got then this big candle that did a false breakout or a fail. So I didn't see any really obvious levels on the daily chart. Now, that it's just kind of nice when you see obvious levels, because then you have, oh, that's an obvious profit target. Like with AKER doing gap fill back whenever that was. When you don't have an obvious profit target, it just sometimes feels like, where do I get in? Where should I be looking at this? What's the spot where I really want to be a buyer? So generally when it comes to stock charts, again, just to reiterate, and I'll go back here and then we'll go forward into chapter 5, part 8. The things that we like to see generally are large gaps and windows on the chart. We like to see that it's not approaching a resistance level, that it's either not very close to a window or gap that's small, or because sometimes the thing with a gap fill is that gap fill is a good setup, but when it's really close to the top, then as it gets to that level, that can be kind of a resistance point because it's filling the gap. So although windows and gaps are good to see on the chart, if it's opening right underneath one, it may struggle a little bit before it can break that level. It may have to retest that resistance, prove that its prior resistance is now support before going up to the next level. So it's nicer to see it open instead just above a window with lots of room up to the window, because then you can get a profit on the first trade and start to build a cushion. Ideally, we like to see either the price is above the 200, or if it's below it, that there's lots of room for it to curl up to the 200 and still have a good profit target. The 9 EMA above it is going to show just that the stock is generally stronger, which usually will be the case when stocks are gapping up. And although we like to see the stock as a former runner, if we see the stock has a history like GLBS of popping up and dropping more recently than its former runner status, then that's going to be concerning. And a former runner that has popped up but then dropped down significantly could have some bag holders. ABIO, for instance, the first day it pops up, it's probably a daily setup for at least a 10 to 20% move, but there may be some people that weren't expecting this drop that are still holding and maybe average down. And so we may see big sellers as resistance as it starts to come back up. Again, we're going to get into more detail in the breakdown of charts as we get further into the classes and you start seeing live trading examples and things like that. But for right now, hopefully this is a good kind of foundation to get everyone kind of on even playing field before we go deeper. All right, so let's continue on now with chapter 5, part 8. All right, everyone, welcome back. We're going to continue here with chapter 5, part 8, setting up your charts. So this is a good time for you guys. This is going to be kind of a working chapter where we'll do this together. You can go ahead and open your different trading platforms that you're using. I'll have a couple of mine up here, and we'll start setting up some charts. So let's line them up. So I've got Lightspeed here. Of course, I can use charts in Lightspeed, so I'll put a chart up right here to start. I will open up eSignal. So I've got my eSignal charts ready to go. And you've seen me in these quite a bit, but I'll have those ready to go. I'm going to have my TC2000 charts right here. And I'm going to have my Ameritrade charts right here. So I do not have eSignal right now. E-Trade right now. But generally speaking, the process is fairly similar. Now, as part of the Warrior Pro course, I'm trying to remember what chapter it is now. I believe it's chapter 14. Let me just check. Actually, it's going to be right here on chapter 15. This is where I'll do an overview of trading tools, and this is where I'll actually do some platform demos of several different trading platforms. And yes, I do have. Where's my Sterling simulator here? And this is Sterling. All right, so Sterling is the software that you can use with a lot of different brokers. It's kind of broker agnostic because Sterling is just a data provider. It's just a charting provider. So companies like CMEG or or even Lightspeed or Centerpoint, those brokers, they don't have multi-million-dollar budgets to build their own trading software. And so what they do is they went and they license software from basically these software companies that all they do is provide white label trading software for prop firms, hedge funds, and small brokers that don't have the money to build their own software. So, and DAS Trader is similar to Sterling. They're both companies that are, all they do is provide charting software. So we've got a couple different platforms that we're going to go into here. So which ones do you guys want to start with first? I'm not sure which is the most popular. We've already gone through eSignal. Maybe what I'll do, I see two of you just said Thinkorswim. So you guys got it. You were the first draw. So let's do Thinkorswim first. And I'll just go through each of them and install three indicators on each of them. And then by the end, we'll have kind of just a basic understanding. All right, so this is TD Ameritrade. When you first log in, you'll be on your monitor tab right here, and you can click on the trade tab. And I use the active trader sub tab. All products looks like this, which is actually the options chain. And it's impossible, you can't day trade with this. So you want to click on the active trader tab. When you're in the active trader tab, up here, you can select how many panes you have. TD Ameritrade is possibly the least intuitive trading software that I've ever used, second to NinjaTrader. But once you get used to it, you get used to it. It's just not intuitive. So each of these panes, see how I have 4 panes? Now for each individual pane, I can add new, I don't know what you want to call them, widgets, new windows. So they call it gadgets. All right, so Brian says he likes NinjaTrader. Well, that's good. It takes all types, and if it works for you, there's nothing wrong with that. So the first thing we're going to do is add a chart. All right, so gadget chart. And we got to type in a stock here, so let's type in GNUS, which is the one that we were watching. So now this actually just all of a sudden pulled up a couple things. It pulled up the Active Trader button, AT. Active Trader is what actually gives us the buy and sell buttons. And this is called the ladder, which I think is unusable as a day trader, so I don't use it at all. I actually would pull up the level 2 typically and kind of change the way this is set up so that I don't even have to look at the ladder. But let's just take this away. We're doing charts right now, so let's stick with charts. It's not a full platform demo. We'll do the full platform demo in the Warrior Pro class. So charts. All right, so there we've got the chart. What I'm going to do is I'm going to click on Studies, and I'm going to click on Edit Studies. Now, right here, you can see that I already have one added on price, which is the VWAP. I'll just delete it, and we'll just go ahead and add a new study. I'm going to type in here VWAP, and I'm going to click Add Selected. And there it goes. Default settings, no changes necessary, but I want to change the color. I'm going to change the color to purple, and I'm going to draw it as, let's see, style, this dotted line like that. And this is show plot, show bubble, and show title. So the title is up here, and I think the bubble is maybe right there. So I'm going to say OK, and I'm going to click Apply. Now it looks like there are 2 extra lines here. This is also drawing a standard deviation. I do not want to see the standard deviation, so under the upper band, I'm going to uncheck this, and I'm going to uncheck this. So I don't use those, so we're going to remove them and click Apply. There we go. We've got the VWAP added. All right. Now we're going to go ahead and add moving average. Moving average. You see there's many of them. And this is moving average exponential here. So we'll go ahead and use this one. And it automatically installed the 9. Okay, so let's click Apply and see what color it is. But it's the wrong color. So the fact that it automatically installs also is an indicator that obviously I'm not the only one that is using the 9 moving average. All right, so now we're going to go ahead and add this again, add selected. And we're going to change this one to purple or magenta. And we're going to change it to the width to 2. And I'm going to change it to a 200 period. Okay, and apply. So now I've got the 200 and the 9. If you want to add the 20, you could do it in the same way. Volume, you can see, is down here. So you can see how it's kind of overlaid in the background. And I'm okay with that. If I right click on this, let's see. Actually, I thought I would be able to change it from right clicking. I'm gonna go to settings right here. And this is where, let's see, I'm gonna be able to make some changes to how this looks if I want to. You can show orders if you want to. I guess it's clicked on, that's fine. Price axis, you've got some price stuff. Time axis, you've got this stuff. Appearance. So I'm gonna change this to fill candles both going up and down. I prefer that. And then under volume, I will have to go in and let's see. So that's the grid. I might have to go and make a change here. Again, I could keep that exactly as it is, but it is a little tricky when it's overlapping. So then the question here is under studies, edit studies. Would I want to make volume a separate one? Volume. Maybe I guess maybe I can't do that. Under general tab, thank you. Okay, so back here to here, under general, under appearance, chart mode, overlay. Guess I'm not seeing it. Okay, overlap volume, apply. There we go, thank you. All right, so so that would be more traditional to the way I look at this right here, this type of chart. Now you can then go to style and you can save this. So we can go style right here once you've set it up and set chart default or wait, save style, ROS default settings, save. And then I think if I type in GNUS down here and I pull up a chart again, that I should be able to right click and go to style and load style right there like that. Now this is a 5-minute chart, so I might want to change one to make it a 1-minute chart. So this is the 1 minute, this is the 5 minute. How do I link them together? Yellow and yellow, and now GNUS is going to update both of them. All right, so that's a quick walk through there. If this one I might take the chart off of and have it kind of like this. So if I made this a little bit smaller, basically what I have here is my level 2 window, which is in blue. Unfortunately, you can't customize the colors on that. So we've got the level 2 there, and I could be buying and selling. I just want to link this to yellow. So just like that, these would be my charts, 5 minute, 1 minute. And again, I'd probably do the same layout as I have it here, but a quick review of that. Okay, so now let's go into Sterling. All right, so Sterling right here, and I'll minimize these ones just so we have kind of a clear picture that we're working with. So Sterling, and I'm gonna right click this view and take the title bar off so I can make this a little bit smaller like that. Oops, that's not what I want to do. Okay, and like that. All right, so you can go to view and, go to Windows, go to quotes and click on chart. All right, so you click on chart and I've got this up on another monitor, so I'm going to drag it up here. So I'll close this. So as you can see right now, as we're looking at this one, close that. This is a 5-minute time frame. That's fine. We've already got a moving average down here. I'm going to get rid of that. That's not where I want it. The volume, this all looks fine. Let's double click on this. Let's see, and delete that and delete that. And I'm going to go ahead and click moving averages, EMA, and click the plus button. That's now going to pop up a window down here that asks me what period I want to use. I'm going to say 9. I'm going to leave that unchanged and change the color to this light gray. I'm going to apply. Perfect. We've got the 9. Now let's do it again. Let's add the 200. Oops. I got to drag this here. So this is going to be the 200. We're going to change that to this bright color, apply, and then we've got the 200. So again, you can go into color and change it if you'd like. This charting software is a little bit more limited in what it allows you to do with changing opacity and things like that. But again, you can see this. So let's change this. How do we link it to this window? Click right here, make it magenta, and we'll check GNUS. By the end of this class, you will know how to use this software if this is what you're using. It's just the same as eSignal Lightspeed or Thinkorswim. This is just the charting portion that we're talking about now. So don't worry if some of this other stuff is still foreign. We're just focusing on the charts. You can zoom in or out with the trackpad. So I'm scrolling with my mouse and zooming in and out like that. You can also click the zoom button here manually if you want. I think that lets you zoom into a very tight spot if you click that and then go like that. All right, so we've got a couple moving averages on there. So let's go and let's see, save current as default. Okay, now if I go to view, or sorry, Windows, and I go to quotes and click on chart, it's gonna load the new chart using my default settings. Easy, 1 minute. And now I'm gonna have on the left the 1 minute, and I'll put this one on the right. So we'll have the 1 minute right here and the 5 minute right there. Okay, so we'll pull that down like that. And I'm gonna link this to magenta. So when I change a stock here to SECO, I'll update. I can mouse over this and zoom in. I can clearly see the levels that I might be looking at on the 1 minute chart. Let's look back at GNUS. What's GNUS at? All right, so GNUS is hanging in there. Now, the drawing functionality, you can right click and go to add line study. And as you can see, you can click it right here, but it's not the same as the functionality that you have in like the software that I use, eSignal. So that's the EMA. Yep. I'm not even sure. I was gonna just see if I could change the color. So there's color, there's that. Now, you know, I don't even know if it's possible to make that standard, or if every time you then draw it, you've got to right click, or you've got to, where is it? You've got to go to chart, you've got to line study, click horizontal, and you know, it's obviously not as intuitive. Back over on Thinkorswim, if I pull that one up just for a quick second to show you the drawing, you can click drawing, and you can go to, sorry, where is it? I'm trying to remember. Drawing tools right here. And this is obviously just like not the type of drawing tool that I want. So let me go and switch to horizontal line. So I could click that there, and I could click this here, maybe here, that's the high. I would suspect that, I haven't done a lot of drawing with this software before, but edit properties. So you can change the left extension, the right extension, you can show or not show price, you can change the width, you can, you do have some options here, and then you can save as default. So this is much more similar to the way I would have my lines drawn, which is good. TD Ameritrade has pretty nice charts, if I'm going to be honest. So with Sterling, you can draw some lines, but they're not quite as easy to draw as you can see. So you might find them to be a little bit less helpful than you'd like. All right, so we've got a couple moving averages on there. If you wanted to add the volume weight average price, scroll to the bottom, VWAP, and click the plus sign. Again, it's going to pop up this right here, change the color, and then OK. But it's not giving you the option to change the way it's plotted to make it like a dotted line. So you can tell that this software, although certainly great for trading and practicing and things like that, the charts themselves are, well, they're a little basic. So what most people do who are using software like this to trade on every single day, and I'm included because these charts on Lightspeed, they're not that much better. So why do I use a platform where the charts are not fantastic? Well, I'm using the platform for the things we discussed about when we talked about what we look for in a broker. Fast execution, reliable and stable from the perspective that it doesn't crash and it runs really quickly. Direct access routing, and of course, affordable commission structure. So the fact that I don't have really good charts, here in eSignal or in Lightspeed, the linking is very difficult. You can't link windows to each other. You can just link to focus. So basically, you can't watch multiple stocks at once. It's extremely difficult to set it up to make it do that. You can technically, but it almost never works properly when you try to do that. You link it here to a quote window, and then that's GNUS, so it'll stay with that. So if I update this to SPY, it's not updating. Let's see, SPY. So there it's updating, but it's not intuitive, and sometimes it doesn't work, and you have to close the software and start it again. So I don't use these charts here. If I wanted to add studies, I could go to studies. I would have to add it right here. As you can tell, this is not particularly intuitive. There's the 9. Oop, these are simple. So switch to exponential, add. Then we'll add the 20. That's fine. SMA remove. VWAP is right here. So we'll add that in orange. And then click add. All right, so doesn't look quite right. Studies. I guess one of them's there, but I'm not seeing, what's the VWAP? The VWAP's orange, but it's not showing up. Oh, this is a daily chart. So I want to switch from the daily. I got to right click. I got to go into chart parameters, and I've got to switch to 5 minute. All right, so there we go. So again, as you can see, this is just not going to be very easy to use for the way I like to use charts. And again, technical analysis being such a big component of my strategy, I really, I would love it if Lightspeed had better charts. I would love it if Sterling had better charts, but they don't. They have what they have, and I pay for this software, but I just have the expectation that I will have to separately subscribe to something else. And so the two softwares that I really like are eSignal, which is at $170 a month, which is not cheap. But as you've seen me use, is pretty easy to use. You can draw very well. You can easily click and grab your toolbar here. It's all sticky up at this area, unlike Lightspeed. And then the second one is TC2000. So TC2000 right here, GNUS. So TC2000, let's go through this one. All right, so on TC2000, I can click on charts, and I can pull up, well, actually, let's work on this one first. So we've got the VWAP. Let's add plot, right click add plot, and then we're gonna go moving average, and we're gonna do exponential. And we're gonna base the moving average on the price. Edit, magenta. We're gonna make this the 200. Okay, and the opacity is fine, the plot is fine, but the width is gonna be a little bigger. All right, now the cool thing with this is better than eSignal in that you can adjust the opacity. Isn't that awesome? You can just kind of like finely adjust that as you'd like. So we'll pull that back just a little bit. Now we'll go add plot. This one's $45 a month. Moving average, exponential here. And we'll right click and we'll change this to the 9. And we'll change this here to this gray. And I could make it a little bit thicker, but I don't want to make it too thick because I want to focus primarily on the candles. If the indicators start to become too bright, it can be distracting. So maybe I'll just make that a little thinner. All right, so we've got, oh, that might be too hard to notice. Okay, we'll do kind of like that. All right, so we've got our moving average here. When I click on the chart, I have this box that shows up right here in the top corner, and this box is showing me the open, the low, the high, and the close of the last candle, right? I have that same thing right here in eSignal, the open, high, and low. This is important because it allows me to check and see what's the high of the last candle. If I want to buy the first candle to make a new high, I need to know what the high is. So right here, this is where I have it in this software, and in this one, it's constantly moving. But there might be a way to make that sticky I would just have to go in and check a little bit. Let's see. Price style. This is fine. Color grid. You can change your colors of the charts as you'd like. Add an indicator. So one thing that I could add here would be float. Let's see. Let me just check here. It should be float. It should be right here. I don't want the symbol. I want the actual latest float. There it is. That's not where I want it. I don't want it as a plot. I wanted to add it up here. So edit toolbar, and then we're gonna add one more here, and we're gonna say float. Why is this not just popping up right away? There it is. All right, so here this will say the latest float, and let's just see if it pops up right away. So it's thinking. Well, that's not going to work. That's an ETF. Usually it works. I'm surprised it's not. Float. Well, in any case, it usually would. I don't know if the stock doesn't have it or if there's some other reason why this is not working, but usually float would pop up. So in any case, we've got this pretty well dialed in. All right, so I'm going to right click and I'm going to save chart Ross default layout. Let me just make sure that that's going to work. I'm not 100% sure if that's going to do it, but so now I'll pull up a new blank chart here, and I want to bury this right here next to that. So this will be the 1 minute. This will change to the 5 minute. And what I want to do is load this chart, but I don't remember if I have to duplicate it. It's been such a long time since I was actively using this, but again, it's not that it makes a huge, huge difference to go through it a second time. Oh, it's duplicate. It's right there. So let's close this for a second. Delete. It's really interesting. You can tell it's not perfect. What was that question? Can I show the settings for VWAP on Ameritrade? The settings on Ameritrade were standard, no changes. I just removed the top and bottom of the bands. So in any case, what you would want to do is set this up, and you may have to go through this a little bit. We do have a platform demo where I get into a little bit more detail of this, and I know there's some other folks that actually use this on a regular basis, so there may be others in here that would be better equipped to help me on this. But you can also create a like a news feed, browse news feed, so all news feeds. Oh, I guess you have to subscribe to it, but in any case, you could have the news feed. You can link these charts together. You can do the symbol linking, so you link the red ones, GNUS. It's now going to upload or update to both of them. I'm surprised that I'm not seeing where to load my saved layout, but for some reason I'm not seeing that. I could be just missing it, but this gives you hopefully a little bit of an idea of how you would set it up, and you probably just have to get in there a little bit and watch some of their tutorial videos that'll walk you through. Oh, share chart template. See, I don't really want to do that. I just want to save the chart template. Anyways, I don't want to waste time on this. So that's TC2000, and let's see. So we had Thinkorswim, we had Lightspeed, which I showed you in brief. We had Sterling, and then we had eSignal or TC2000, and then eSignal lastly, which you've already seen quite a bit of. So eSignal, you can set up your layout, and then you go down here to style templates. you save the style template, and then you can load that template just like that. So it is pretty intuitive in that way. You can pin your drawing tools right here. You can easily jump between time frames. You can link the time frames like this, and they have a news feed as well. All right, so that is, I would say, a basic breakdown of setting up your charts, which was the goal of the last part of Chapter 5. As we get into Chapter 6, 7, 8, and 9, I'm going to start breaking down for you guys some more of the components of a trading platform. And the goal is that by the end of this class, you not only understand how to set up charts, how to read basic charts, but how to use these windows here and here, how to read these windows here and here and here, and really how to fully navigate this software. As you can tell, software for the most part, even though I haven't actively used TC2000 since 2014, it's fairly intuitive most of the time. Trading software is, once you kind of have used a few different platforms, you can usually pretty quickly find your way around. Obviously, there's some nuances that you might have to go and, get some extra help with, but it's kind of like learning how to drive a car. And the difference between driving a Honda and driving a Mercedes or driving a pickup truck, there's differences. You get, you sort of figure out, the different little tricks, and you could probably drive a car for 5 years and there's certain things that you didn't even know it did and you never used it and it didn't matter. That's definitely the case with eSignal. This has, you can launch these windows like Sector City. I never use it. This has a lot of functionality that I don't feel is helpful for my strategy. I think that this is probably the same with, well, it doesn't look like there's as much here, but it's one of those things that, a lot of these softwares have, pieces of software have a lot more functionality than you necessarily need. It's just finding one that works for you, that allows, as part of your workflow, that you can, move quickly, that you can get in, get out. It's utilitarian. That's what you want. You don't want to get bogged down by software. If it's slowing you down, that's a problem. And although TD Ameritrade does have pretty nice charts, I don't like them as much for a couple different reasons. I can't scroll in without having to click and grab. I like to be able to do it with my mouse. The mouse just rolls it forward and backwards. Again, if I really, really wanted to make this my primary trading platform, I probably could get into the help desk and find out, is there a way I can change what happens when you scroll? And maybe there is, but maybe there's not. It depends on the software. So I'm not a huge fan of TD Ameritrade's charting software because it feels a little clunkier to navigate. But I know a lot of people use it just for the very fact that it's free, and that's better than paying $45 a month for TC2000, and certainly better than paying as much as I pay for eSignal. So now I see this little arrows here when I don't think that was there before. Very interesting. So I'll delete this, delete this, delete this. Is it just me, or did that just appear? So we'll put that there. Export chart data. So no, don't want to export that data. Still would think there'd be a way to save this, but and this is kind of interesting how you have the dual bars here, one for volume, one for float. I would probably be more inclined to move the volume down here just to have a little bit more of a separation. Keeps things a little tighter on the side. I think that would be my preference. And then to go in here. So if I were you, I would probably consider a subscription to something like TC2000 just because charting is such a big component of the strategy. And, again, it's not that I don't like Sterling, or it's not that I don't like even E-Trade or Ameritrade, but the functionality, it doesn't allow, in my opinion, for really, really quick analyzing of charts, which is something that ultimately we need as part of this strategy. So I'll duplicate this again. I'll put this one down here. So this will become the daily chart. So we've got that daily chart right there. We can go back and look at daily levels. This really does have so much room as it's going higher. So I talked about how I stopped using TC2000 at the date of the Alibaba IPO. So Alibaba, let's see, Baba IPO, because they didn't have, it was 2014. What was the date of it? Date of Baba IPO. September 19th. So that was the day that I said, I'm not using this anymore because I was just so frustrated with it. Out of curiosity, let's show my task manager and see how these are all running. So eSignal, well, I've got, let's see, right now on eSignal, I have only 2 charts open. So let's try to duplicate this, right, like that, and then I'll tab this out. So I'll detach it, float in a new window. So I'm going to put that over here, and I'm actually going to have to duplicate it one more time to have the same number of charts. So, you know, just to kind of compare apples to apples. Let's see. So I'm going to duplicate this one more time and float in a new window like that. All right, so this is now a little bit more similar to what I'm currently running on eSignal. And I mean, that's remarkably less bandwidth than, it's using a lot less memory, like a lot less, which is interesting. This is my one other chart that I have open. It does go down to a 10-second time frame, which I like occasionally, but you know, again, that's very specific to eSignal. TC2000 doesn't offer that. If I close those all, it might speed it up a little bit. But yeah, it's interesting stuff. So, you know, the speed of your computer, because at one point TC2000 was running on, I think it's called Microsoft Silverlight. And so at that time, it would run really slow when I would pop it out to like 3 or 4 monitors. But it seems like it's running quite well here. So I'm actually impressed. And eSignal is kind of using an absurd amount of memory here for what appears to be a fairly simple layout. And I don't even have my second chart open, because usually I would also have this chart open. So I'll open this one and detach it. Let's see what happens with the memory now. Uh-oh. Uh-oh. This doesn't look good. I am running, I mean, I'll give eSignal credit. I am running eSignal, TC2000, TD Ameritrade, Lightspeed, Sterling, Firefox, and a couple other things all at the same time. So my computer is feeling the burn right now a little bit. All right, so I'm going to detach this. Detach page. So usually I would detach this and then flip this over on another monitor. So yeah, I don't know. Something to think about for sure. All right, well, is that helpful? I hope that you guys are at least in a kind of spot here where you're understanding how these charts are set up. Nice on GNUS, squeezing up a little bit further. Man, I don't know. This looks like we might have a second day of opportunity on it, but I would not want to be holding that overnight. I would be concerned about the risk of secondary offering if I was going to be honest. The best plan for Canadians? Well, TC2000 is, you can use as a Canadian, and it's $45 a month either way. So let me just check here on my services side. Again, you know, prices I'm sure subject to change, but yeah, it's actually, so here's the breakdown. I just want to make sure my personal info wasn't on there. So it's $29 a month, and then real-time data is another $14. So that's $45 a month. You know, I think it's worth it, but I am surprised that the float's not showing. I don't know if Jess or anyone else that uses it can comment on what that's about, because that used to show on every stock, but again, that was years ago. Maybe they discontinued supporting it. It was just kind of nice to pull up a stock and immediately see what the float was. So Paul says the float's not been there for a while, so they removed that functionality. That's kind of sad. But I have thought, you know, I really have entertained the thought of switching back to TC2000 and not using eSignal, just because I like the idea of being able to say, yeah, I think you should use the same software as me. Not only is it good, it's also affordable. But you know, I'm very used to, at this point, eSignal, so I don't know. And I do like to be able to drop down to that 10-second chart, especially when I'm doing a recap or I'm watching a stock coming out of a circuit breaker halt. those are times where it can be helpful to see that, which I know it is much more bandwidth intensive on the computer to try to run like a 1 second chart. I mean, this is probably going to jump it up a little bit here because it's going to be constantly, it's having a hard time keeping up right now. So it's almost like a tick chart. I think that's not necessary, but you know, sometimes a 10-second can be helpful. So good stuff to think about. Now, back over here, again, these are the indicators that I typically use: the 9, the 20, the 200, the VWAP, and the volume bars. We like to look for multi-time frame alignment, which means I always have a 1 minute and a 5 minute chart set up. So to give you a quick preview or walkthrough of what my whole trading station looks like, front and center, right now I'm using 4 monitors. So this is my main laptop screen right here. It's this in the corner, and then on this side, usually I have the chat room. All right, so that's down on my main monitor. My second monitor, which is right here to the left, looks like this, watching 2 stocks. 1 minute, 5 minute daily, and then I have a 10-second chart here that I usually don't use, but in the event that I need it, it's there. The time that I would use it would again really be just like coming out of a halt or something like that. But I think that this is what is probably using a fair amount of bandwidth. Now this 10-second timer is probably not helping either, but I don't recall whether or not I can, where I remove that. It's the interval. I'll have to ask Mike. I bet he'll remember. Mike is using eSignal as well. He's been using it for a long time. So that's my left monitor. My right one looks exactly the same. And then the one up here on the top, I usually have a chart and then scanners on the left. So that's the way I have it laid out. Sometimes I feel like today, I really wasn't using any of the charts on the side because I only had 2 stocks I was watching. Other days I feel like, man, I wish I had one more, area of charts, but I am pretty content with the way it's set up. So as we continue on, coming tomorrow, because we're coming up to the end of class for today, we will continue with helping you guys understand how to use this software. Chapter 6, we'll get into reading your account balances. And so we'll move through chapter 6, 7, 8, and 9 fairly quickly, as I think most of those topics will be pretty straightforward for you guys. So just again, to set the agenda for the coming days, we've got, this is the plan right here. All right, so hang on, I'm just grab the screen. All right, so this is what's coming up next. Account information and balances. Then I'll show you how to enter orders. We'll talk about market orders, limit orders, routing. Then we'll get into level 2, time and sales, your order window and hotkeys and buttons. Actually, I have to change this around a little bit. Positions window, scanning 101, preparing to trade, psychology of trading, and then 15, getting ready to go into the pro classes. All right, this is your orders window. The hotkeys and buttons we're actually going to talk about right here. I have to change that. All right, you guys, so that's it for me. I hope you all have a great rest of the day. And those of you who are watching this streaming, you can jump forward to the next chapter, chapter 6. All right, see you guys then.